Good day, everybody. It's your guy here. Today, I want us to look at some beautiful trades that happened today, okay? And guys, as I always say, if you come to your charts and you don't know exactly what you're looking for, you are simply gambling. You need to know exactly what you are looking for at what time by the time you come to your charts, okay? Which is why we have our like simple steps to follow. We have these steps over here. As you can see, this is the strategy, and these are the steps we follow each and every day. Trade volume before the session opening. If there are news, you wait for the news. Then we want a chart pattern. We want an evidence candle at the right time, and then that's where we enter and target, right? When I say at the right time, obviously you know we are willing to this is what we are looking at. Okay, first of all, we need to take an evidence candle that happens as close as possible to o'clock. So we are only willing to take from 50 to 10 past, or from this is half past, or from 20 past, right? From 20 past to 40. Okay, if the evidence candles happen between these times here, we are taking it, or between these times here, we are taking it. If it happens anywhere between here, we are not taking it. So this is just the watch, okay? This is just the clock, okay? You just look at your watch, nothing complicated. So guys, I'm gonna go to my charts right now to show you something very important. Okay, I will start with the S&P, and you know S&P is highly correlated with the NAS. So what the S&P does, the NAS will obviously do. It's just that the S&P is gonna be double volatile as compared to the NAS. Okay, guys, when I look at this chart here, I saw something, and I believe most of you also saw that. If you remember, on page 8 on your playbook, page 8, we spoke about the trends, and I told you these are the things that they don't give every day, but when they do, they present high opportunities, okay? And I also wrote here, okay, these are called explosive trends, okay? These are easy to spot. Why? Because they have two or more trend lines at different levels. And I said it's crucial not to go against this explosive trend. Why? Because they can cause big losses, okay? You can blow your account if you go against this explosive trends. You see, they give a first trend line, another trend line at a different level, then they explode. The same applies to when they are going down, okay? They do the same trend line, and you see, then on a different level they give another trend line, then they explode, okay? So that's exactly what happened today. And I did say, guys, do not go against this. I wrote this many times. Again, I repeated it on page 9 because I wrote it on page 8, and then I repeated it on page 9 again, where I said it's crucial. Never go against them, okay? These trends are very powerful and could cause big losses if you go against them. I repeated this thing more than twice, okay? Because it's crucial. So you have this kind of trends on page 8, okay? So this is nothing new that I'm introducing. Let's go now to the charts. If you look at the charts, guys, you can see first trend line. This happened late, of course, towards the close. But one thing that is of importance, you can see they kept repeating this line over here, and if you try to pull this line through, you'll see there are no more touches down here, right? So yes, of course, that calls for another trend line. And when you put another line over here, when you put another line over here, you can see now these are trappings on different levels. This is an explosive trend. You don't want to go against this. It's the same thing I put in your book here. First line, first trend line, second trend line. Sometimes they can give up to 3, but most of the time they give up to 2, okay? And that means what? They are about to explode, okay? They are about to explode. You don't go against this. So you did have this, okay? You did have this information, okay? And then secondly, again, if you go to the same book, somebody will say, but this is not written on the criteria. Okay, if you look at page 23 of your book, which is gonna be page 22, okay? It's only 23 up here because there's a cover page and stuff. Okay, if you look at the criteria, here are the criteria that I put in for you. Trade volume before the session, equity opening time, which is 9:30 New York time, okay? And then trade volume during the session. Here we look at the chart pattern, okay? And then we need the evidence at the correct time. I just showed you the times, okay? And then our, okay, you see 50 here, okay? The maximum stop loss is 25 and the minimum TP is 50. That is to say, if you are risking 25 for 50, you are actually having a risk reward of 1:2, right? A risk reward of 1:2. This is the lowest risk reward we are willing to take. This is the lowest risk reward we are willing to take, okay? Okay, however, market conditions will show you how much more you can target, because sometimes you can go 1:6. I've done that on S&P and I've showed you that, where I can risk 25 roughly for 200, 300 or even more, okay? But the minimum we are willing to go is 1:2, okay? So you have all this information, and when you look down here, what type of trend do you see? And mostly before the session starts, the trend that you can be able to identify is the explosive trend. Although we have more than 6 trends that I've shared with you on this book, it's important to know which type of trend you are in, because when you are aware of that, you get the most easiest opportunities. However, they are not always going to give you the trends, okay? Which is why most of the time we focus on this. But when they do, they will give you lucrative opportunities that will like grow this your small account in a crazy way, okay? This is important. Here and there, they will give you the trends, okay? So now let's go back. As you see here, we are going to the next criteria now. What is the next criteria? Identify trap volume before the session. And I said most of the time they are going to trap below or above the closing price, which is here denoted by the red line. It's a free indicator in the description. Okay, you can see they kept coming and bouncing on the closing price, and we are coming 10 to 5 minutes before the session opens, okay? So we are coming at this time here. And that's when we will have all this information. We will have all this information by the time we come, because you can see 1, 2, 3. They've already hit this line 3 times before hitting it during the session, okay? Which is highly, highly, highly important, okay? Okay. So let's look at this. Oh, I'm in this trade. So it's going well. I'll share that with you, okay? Because I told you I use MT4 to analyze, but I use MT5 for my executions. So I am in this trade and I will share that with you, okay, on this video. So don't worry about that. So when we identify trap volume, who is trapped? Everybody who went up here is trapped, okay? Everybody who fell for this move, go up is trapped. And when we talk about trap volume, we are simply talking about those who are at a negative when we are coming to our session opening, when we are coming to analyze who is at a loss, okay? That is highly, highly important for us. So you can see, yes, we are objective, we are super objective, but today, if they show us or give an opportunity to the upside, we are not taking it in any way. Why? Because first of all, that will mean we are going against a super explosive trend, which is something we don't do, okay? Something we don't do. It's written on your playbook, guys. Please master these things. Please master these things and don't forget them, okay? When they happen, they are gonna give crazy opportunities, okay? So now, when the session opens, we don't take the first candle. We spoke about that. We want to see a chart pattern, right? We want to see a chart pattern. And all these things, you have them, okay? You have them. You have them first on your playbook, and secondly, you have them on this sheet, okay? And I've been explaining these things in all my videos, okay? Trap volume before the session, we have seen they've trapped up, okay? We wait for the session to open. We didn't have news today during the session, right? So now we are coming to the chart pattern, okay? We are coming to the chart pattern. Let's go to the chart pattern now. You see, we have this, okay? We have this kind of a pattern triangle. I already told you that 90% of my execution are based on a triangle. So we are gonna be feeling here. Do we see a pattern? Yes, we see a triangle, right? You just fill this up, okay, guys? Triangle. Is the pattern perfect? I told you, for a pattern to be perfect, we need 3 touches up, 3 touches down, okay? Let's see. Do we have 3 touches up and 3 touches down? Okay, first touch here, okay, and then second touch up. Okay, now I'm just gonna pull this through, and then we have, okay, they come down, they go up again. You see, touch up, touch down, they come up again too, okay? and then they come down. Okay, they gave us 2, they come up, down again, they go up again. So already we have 3 above. Okay, already we have 3 above, and they come down again. Okay, and of course we have 4 above, and we have roughly 3 down. So if they are breaking down to the downside, that simply means we have how many? That simply means we have 4, and the minimum is at least 3, okay, for it to be perfect. So yes, it is perfect. Why? Because we had 3 touches up and 3 touches down. Okay, and look at this again, guys. The pattern time, I told you, if the pattern takes more than 1 hour to build up, that's when we can target 100 points. This is usually on the Nasdaq, but if it takes more than 1 hour on S&P, I will target 200, because S&P is more volatile than the NAS. Okay, so when you look at this, okay, I'm just looking at this because I am on this trade, okay, and I'm gonna share that with you. Okay, when we look at this, how long did it take? Pattern time, okay, the time it took. We are on a 1 minute time frame, so we just hover here and we can see now it took 30 minutes. It took 30 minutes. Okay, so this simply means, okay, it's less, we can't target 100. Okay, so let's continue. We are going to continue. Okay, and now it took roughly 34 minutes, which is less than 1 hour, so we target 50. And then do we have an evidence candle? This is the big candle that breaks out of the pattern. Okay, the big candle that breaks out of a pattern. Say for instance, as I said, 90% of my execution are triangle. If this is a pattern, sorry, not too perfect, if this is a pattern, right? Okay, I'll draw it like this and I'll pull this line through. If this is a pattern, we need a big candle that breaks out. I also gave you all the patterns you need on the playbook as well. Okay, but for the patterns, you can still do a Google search, you'll still find them. So do we have this big candle that breaks out of the pattern? Let's see if we do. Oh yes, and I told you the breakout candle must be the biggest candle from the last leg, and you can see this one is the biggest from the last leg. So yes, we had what? We had an evidence candle. Okay, and now we're gonna look at the most important thing. What time did it happen? I told you this is the watch, so this is o'clock and this is half past here. This is half past. Okay, we are looking from 20 past to 40. Okay, and we are looking from 10 to 10 past. Okay, this is roughly gonna be 50 on the watch. So we are only gonna take executions here, because the main goal is to take executions that are as okay, it's fine, that are as close as possible to the half past or to the o'clock mark. Okay, so that's why we are taking from here to here or here to here. Okay, so what time did this happen at? Okay, now let's go and look at the time of the evidence candle. The time of the evidence candle is 4 past, which falls within my golden times. Why? Because I told you that we need an execution as close as possible to these times. So if I get it from 55 to 5 past, this is what I call my golden times. Why? Because it's as close as possible to here. And if I get it at 25 past to 35, then I'm talking about this candle over here, right? If this candle happens in between here or in between here, I love it more, because these are the golden times. Okay, so yes, when we go back to the chart, it actually happened at the golden times. So you execute. I told you maximum stop is 25. You can see this candle was roughly 25 on its own. This candle was 25 on its own. Okay, so it's not a super big candle. 25. Okay, and you can target 50. Okay, and S&P you can even target more, but this one was just 25. Yes, and let's see, it went all the way. The first touch to the closing price was 50, but it actually went up to more than 70 pips. Okay, and this was the best and the most easiest one for today. Okay, remember, sometimes you come to your charts and they moved heavily and now you are regretting, I should have been in this move. No, you take what's yours, because not every day, it's not every day when you can actually take a move like this. Okay, so today, yes, it went. Usually on S&P I target 100. Okay, but again, it's also important because now you are as close as possible to the closing price. They might react on that, but I don't pay close attention to that much. Okay, so yesterday it went up to 70. Okay, so this one was the best one for today. And what the NAS does, the S&P, what the S&P does, the NAS is more likely gonna do. Okay, I'm gonna come to this one. When they fall heavily, when they fall heavily throughout the day, you must know that most of the days they are gonna retest later in the evening, and that can happen pretty late. Okay, that can happen pretty late. Okay, so if they just collapse, it's not encourageable to actually counter a strong move like this. But most of the days they are gonna give like a pullback later. Okay, they are gonna give a pullback later. So again, you just look at the patterns. Okay, you just look at the patterns. If you look carefully, we got a head and shoulder. Okay, we got a head and shoulder. That's why I'm telling you I'm still on this one, and we're gonna follow this one using the same patterns. So I'm gonna go and follow the same criteria we do. Yes, I told you, do not counter an explosive trend. So yes, of course, today they've exploded, and we are not countering it all the way back. No, it has already exploded, and most of the day when they explode like this, sometimes they can go 500, 600, but later in the evening they are more likely gonna retest. Why? Because you know that everybody is chasing this move. As it's collapsing, everybody sees it. Oh, it's collapsing. So people are jumping in all along the way or into this move. Okay, people are jumping into this move crazily. People are jumping into it, so it is bound to retest at some point. Okay, let me show you this. Okay, still again, we know that later they're more likely, but we're not going to enter if we don't have a pattern. Shoulder, head, and you see they came and bounced here and they went. I'm not counting this red two candles because this is an inside candle and this is an inside candle, so we don't count inside. We count the ones that went down. So you see they bounced and went down with 3 candles. Then they came here. This is not the entry candle. We are waiting for a super big candle that breaks out. But again, let's go and use our tick box. We're going to use this same tick box. Okay, we will be using this same tick box to identify the trading opportunity, because it wouldn't be fair if we don't use it and use it for other executions. Okay, and yes, when you have taken, guys, it's not advisable to keep coming for more, but when they fall like this later in the evening, they are more likely gonna reverse and punish people, because there are many people who actually entered along the way. Okay, so let's use this box. Remember, this is the final decider. Okay, remember, that's important. Always the time is important. Okay, the time is important, because I believe prices are being moved by an algorithm, and the algorithm is too perfect. Okay, so do we have a pattern? Yes, we have a head and shoulder. And one thing I showed you even in yesterday's video is that when you have a head and shoulder, the perfection of the pattern no longer matters. If you look at the video I posted yesterday and the ones I posted previously, I've been showing you this. The reason we need 3 touches up, 3 touches down is at least the number 3 is a very strong psychological number. If you follow Steve Mauro, you know that. Okay, so now we want to include it. Why? Because it's a very powerful number which is used by market makers. Okay, so look at this. Head and shoulders, by nature, they send people up into the wrong direction 3 times. Again, if it's a head and shoulder to the downside, they do this 1, 2, 3. Today I had beautiful trades and I'm gonna share them with you. Okay, so this 1, 2, 3, so it's no longer important to have 3 touches. Okay, it's no longer important because they send people down, so they send them down 3 times. 1, 2, 3. Okay, so this makes a lot of sense. Okay, so this one is not applicable, and the same as this one is not applicable, because head and shoulders, I told you yesterday, if just go and look at yesterday's video. Okay, these things happen each and every day, so I might record something like now telling you this and it happens tomorrow. They happen over and over and over again. I told you, if you watch yesterday's video, that pattern time is not applicable for a head and shoulder. Why? Because head and shoulders are are short. They don't take much time. They don't play around when it comes to this. And I'm going to show you this immediately after this one on S&P. Okay, I'm going to show you why I'm saying this actually. Okay, they are too short, but I showed you how I'll show you to target, because we use this pattern time to know if we are targeting 100 or less than that. So I'll show you how to target on this. I did show you yesterday, but I will repeat it, the same thing. Okay, so now we are gonna go to, did we have an evidence candle? Now let's go. We have a pattern. Do we have an evidence candle? An evidence candle is the big candle that breaks out. Yes, of course, if you look at this candle, is the biggest one compared to the last leg down here. And sometimes you're looking for super perfect pattern, guys. This is enough to be a head and shoulder. Okay, this is enough to be a head and shoulder. Okay, they are going, because my target actually was this recent swing high. Okay, remember, I'm not taking it all the way, but more likely they're gonna go to this level, which is the low, because usually they go back to the levels. Okay, that's why mostly they bounce on the levels. They are most likely gonna go here. But for me, because we have an explosive trend and I don't like counter trending, that I actually targeted this one. As I told you, I use MT5 to execute, and MT4 for my analysis, because I have the indicators here on MT4. Okay, so yes, it's actually going well, because this was roughly my target. Okay, so now we have everything. Now we have everything lined up. The only thing pending is what? It's the time. Now we have to confirm the times. Guys, the times matter. It doesn't we can't take this away from the time. You see, it happens at 18:32. It's late. It's actually saying 18. This one is behind in 2 hours. So this happened at 8:30, right? Okay, it's roughly 18:22, because my broker is behind in 2 hours. So the time is still within what? The golden times. Okay, the time is still within the golden times. I've just shared that with you. Okay, okay, yes, I just deleted it, but I shared that with you minutes ago. So this is 32, and yes, we have an evidence candle. So there's nothing standing in front of your execution. And as I said again, your maximum stop is 25. You see, let's go. This is 24. Okay, you see, this is 24. And let me show you how to target on head and shoulders. You take the neckline, you just take, okay, you see, we take this distance, fine, we just multiply it by 2. So this distance, and then we multiply it by 2. Okay, so this is your target. Okay, this is your target. For me, I targeted the recent high low, but I mean lower high. Okay, so this is your target. I told you yesterday, you can use this tool, the Fibonacci. You can use it like this. Okay, still it's giving you the same thing. Why? Because it's this distance times 2, and I gave you the settings yesterday. Let me give them again. Okay, these are the settings of the Fibonacci. It's 0, level is 0 to 0.0, it's 0.5 to 50, it's 1 to 100, it's 2 to 100, and it's 3 to 300. I repeat, 0 to 0.0, 0.5 to 50, okay, and 1 is to 100, and okay, 2 is to 200, and 3 is to 300. These are the settings. Okay, so this tool will actually help you. Okay, it will help you target. Okay, if you read Shabaka's book, Edward Magee, that's what they actually use for targeting. Okay, so yes, you can see how many. If you targeted at least this is roughly 200 pips. Okay, but for me, I targeted at least more. This is 300 because I targeted this one. Okay, but it's again, I use the same things we speak about day in, day out. So you can see S&P is highly profitable if you focus more on it, but I'm not saying focus more on it because it's usually the evidence candles are too big, so you have to wait for this recent pullback, and when it closes up, that's when you execute it. Okay, but as you can see again, it delivered almost 296. It's almost 3. Okay, so you can see you risk 25 for 3. I told you, I just mentioned this to you, that market conditions will show you how much to target. I just explained it here, that the minimum we are willing to go is this one, but sometimes you'll take 1:6 or even more. Okay, because if I'm targeting 3 with a risk of 25, you can see this, that is 1:6. Okay, exactly what I've shared with you. Okay, because guys, this thing happened almost every single time. Okay, 1:6. And just as I was saying, it's what I've just taken here. just taken here. Most of the days they will retest if they fall heavily, okay, but we are not counter trending this strong move all the way back. No, we know that everybody is jumping in, so they're here for the stops. Okay, there are people who entered on this pullback when it went down, so they're just here for the stops, and people think, oh, it's gonna keep going, keep going, keep going, so they came back for that. Okay, and obviously what S&P does, the NAS will do. Okay, so I won't talk much about the NAS because it's the same thing if you look at it. Okay, it's just the same thing. Sorry. Okay, you know, sometimes they come close and I count this as a touch. Okay, but again, if you pull this line through, you'll see it doesn't match. Okay, the only way this line matches is if you bring another line down here. So this is an explosive trend. I told you, you have these trends. There are many. I gave you many trends. Actually, I gave you many trends. Okay, I gave you many trends. I told you master them, and even below each and every trend I gave a description and what to look for, how to enter, and everything about that. Okay, so guys, these trends are very, 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 very good when they are given. Okay, sometimes people forget about these things, but I just told you before, the reason I don't talk about them that much is because I know most of you have mastered them, and most of you know that, okay, already, because I've been working with some people and they always look out for explosive trend. What type of trend do you see? This is in the criteria I gave you on page 22. You see, this is what you look for, and this question is here. So it's nothing new, because somebody will come, but this is something new. No. It's nothing new. It has always been here, because this thing was written last year, and most of you had it from last year. So you can see this has always been there. It's important to know the trend so that you don't counter trend these trends. Okay, these trends, you don't counter trend them. There are more than 6 trends. And you need to know, because below I've given a description and I even went deeper about that. Okay, because as you can see, we have creeping trends, we have a lot of trends, guys. So okay, let me go to another one. I'm not gonna go to the NAS because it's the same thing as the S&P. You can just go to the NAS and see. Okay, because again, even the NAS gave a head and shoulder. Okay, the NAS gave a head and shoulder even here. Okay, they gave the same pattern here, went down, but I told you, the fact that they went down, you are actually looking for your opportunity, and if your opportunity is not presented, you just need to know that, okay, you have to wait for the opportunity. Like now, this is the head and shoulder they just gave. Okay, this is this is the head and shoulder they gave. Shoulder, head, shoulder. This is the ascending one. Still, again, I shared this one with you in the playbook, and I showed you yesterday where we have more than 7 types of head and shoulders. Okay, more than 7 types. I think it's more than 8 or 9 types of head and shoulders. Okay, and it went back. It's just that the reason I prefer, if they're giving me the same setup, the reason I prefer S&P is because it's more aggressive. Okay, it's more aggressive. Again, guys, you can see, okay, this one didn't give the explosive trend, right? But again, when you look at who is trapped, you can see, okay, these guys up here are trapped because the session is opening here. They take you back into trap volume. So even if they give you an opportunity back, you must be aware that now they use the entire day to trap these guys. They might be leading you into trap volume, and if you fall for that, you are gonna be in trouble. I told you there are 3 possibilities. They can lead you into trap volume, come and stop hunt everybody from this trap volume, and as I said, they trap above or below the closing price. Guys, treat this closing price as a magnet. Okay, prices will come to it, and then after that they repel. So they're gonna play on this level and then repel. When they repel, prices are gonna explode. Almost every day they will come to the closing price and do what, and that's when they explode. Okay, they will come to the closing price, and that's when they do what, they explode. Okay, if you read the little book of Market Wizard, get the little book of Market Wizard where he was interviewing different kind of traders, you'll see there's an interview where he did with Paul Tudor Jones, and Paul Tudor Jones, on that same book, the little book of Market Wizards. Okay, yes, the little book of Market Wizards. If you read that book, that's where you will see that Paul Tudor Jones actually responded on that book and said, mostly the entries are gonna come from the closing price of the previous day. So this line here, it's a free indicator in my description. As you can see, it's you can just search pre-day open close line. Most of this time, this is gonna be the magnets. They come back because they're attracted, but when they go away from it, it's like now the magnets are repelling each other, and it's gonna be explosive into the other direction. Okay, so right now I have something for you, because I told you today I have beautiful executions. I told you guys that I do also take currencies and gold, but not always. Okay, they also have to comply with the patterns. Okay, like I only take them when I have patterns. If you look at something like gold, it has been going up and up and up and up and up. Okay, and then today, as I was looking at it, it gave something crazy. The patterns work everywhere. It's just that people, you don't master these patterns. They come in different variations. I've given you more than 30 or 40 patterns. Okay, more than 30 or 40 patterns. You see, I was waiting for this. This blue line is the high. This one is the closing price. Yeah. I told you, when a pattern builds up on a level, this becomes my A plus setup. Okay, that's what I've been singing ever since. I took this one today. Okay, you see, and this one shows it's gonna explode. You see this, they use the you see the bounce here, so it's shoulder, head, they came and bounced, so it's, and that's where they went up again. So they used what? They used the closing price, or the high of yesterday, because this is just the high of yesterday, this is just the low of yesterday, and this is just the closing price of yesterday. So when you look at gold, what did they use? They used the high of yesterday as a neckline. Guys, these levels are like magnets. When they move away from them, same thing, guys. This is an evidence candle. Why? It's the big candle. Somebody will look at this and look like, oh, this is no, this is an evidence candle. Why? Because it's the biggest candle from the last touch. It's the biggest candle from here to here, from the last touch. I told you guys, how do you target on head and shoulders? You take the neckline and you can target this distance here. Okay, although most of the day they are just moving from the level to the level, but this is enough of a target. Look here, this is 180, in and out, straight, quick. Okay, I thought it went up more than 300. Okay, 400 actually, it went 390. This is 400 because they went and pieced through the low of yesterday, the low of Tuesday. So they pieced two lows, and usually that's what they do. Okay, but the pattern was there. Okay, on gold, you can use a pattern on a 1 hour time frame or on a 15-minute time frame. As you can see, this one was more visible on a 15-minute time frame. On currencies, you can use a pattern that builds up on a 1 hour time frame. Okay, those are the patterns that pay. Patterns work. It doesn't matter what kind of pattern. Patterns work. They work. Okay, patterns work. You like it or not, patterns work. You just need to know how to actually execute them. Okay, but for this one, this is not the index, so the timing here can be super different. Okay, super different. As you can see, this one happened exactly at o'clock. Okay, so we don't wait for the session. Why? Because if you're gonna be looking at gold and you want to wait for the session, or if you are looking at currencies and you want to wait for the session, it won't work perfectly. Why? Because remember, indices, like let's say it's S&P, this is a group of stocks. Okay, it's a group of stocks, and the stock markets open at 9:30 US time. So the stock market opens here. That's why the first candle always is a big candle. That's when most of the orders are coming in, right? That's when most of the orders are coming in. So it's different. The commodity market doesn't open at that time. Okay, so the currency market also doesn't open at that time. There are many orders happening throughout the day, many orders throughout the day. However, for the stock, it opens at 9:30. That's when you see, and that's why we wait for those times. But again, even this candle happened exactly at o'clock. You see, okay. But not to say we wait for the session. No, we don't wait for the session. But this was a perfect head and shoulder, and they used the levels. And I told you, if it comes from the level, it's gonna pay. I told you, these levels are like magnets. And whenever they move away, it's like now the markets, the the magnets have like been repelled, they just shoot boom. Okay, so that's exactly what happened. So guys, all in all, this is the information you have. You have all this information, you have all this information, you have all this information. Okay, you have all this information, and the playbook is in the description. As I always say, most of you have it. Okay, please don't forget these trends. When they show up, they are gonna give you the easiest form of a trade. Again, it's like when they collapse fast and then they start taking many hours. This is in most cases guaranteed that they are gonna collapse. I've showed you all these trends. These are different trends you should master. Okay, these are different trends you should master. Just make sure you practice them. Okay, and you don't forget them. Every day you ask yourself, what trend do you see? Because when they give them, you don't want to counter trend this. You don't want to counter trend. You don't want, believe me, you don't want to counter trend this, because this shows you that the move that is coming is gonna be super explosive. Okay, so guys, you have all this information. You have all this information. Okay, so I really appreciate you guys. Have a blessed day. If you are new, hit the subscription button. Okay, and yeah guys, you have all these things. Just master them, because these trends, there are more than six, I think more than 9 trends if we put them all together that I gave you on this playbook. Master them, please, please, please. When they show up, they're gonna give you, like, they will grow that account in a crazy way. Okay, so guys, I really appreciate you. Have a beautiful day.